Welcome to Markets Now. I'm Michelle Rook with Sean Hackett, Hackett Financial Advisors. Well, livestock were leaning mostly lower on Monday. We were mixed in the grains. And Sean, let's start off talking about the wheat market because wheat has had like a 7-day rally, 50 to 70 cents. But winter wheat at least took a break on Monday. So was that profit taking or some hedge pressure?
Yeah, it's a little profit taking, and some of the weather models showed a little rain maybe coming into Russia. We don't think it's going to be a big deal. It's the biggest rally we've seen in wheat in 3 or 4 months, and certainly farmer selling contributed to a reason for the market to take a breather here after such a strong rally. We do believe that the pillars of the rally are justified, and we do think that the market will keep itself in here for a while until we can get clarity onto how much the dry weather in the U.S. and the dry weather in Russia has in fact hurt the crops.
Yeah, this has been obviously some weather premium that's been put into the market. And so we're taping this before we get winter wheat conditions out. If those winter wheat ratings go down substantially, could we be off to the races in wheat again tomorrow?
Certainly, I think we could put what we took off today back on, and depending how much we're down, I think certainly we could get a pop tonight I don't see anything that says these conditions are going to not fall. It's just a question if they fall far enough to surprise the market more than they were surprised last time. The other factor is geopolitics. Wheat is a geopolitical ag commodity. It's really the only one we're aware of. And I just think when you're looking at what's going on in the Middle East and what's going on with Russia, what's going on with China, I think, and we have this May 7th election celebration for Vladimir Putin. I'd be on the lookout for the potential for some geopolitical premium to be added onto wheat, which is something that we haven't seen in a while. But that's definitely all the other markets like gold, like silver, like Bitcoin that tend to move for geopolitics have moved. Wheat looks to be a sleeper here.
Yeah, I want to dig into the geopolitical part of what's going on in the metal market here coming up. But I agree with you, putting some more premium in that market for sure. Okay, the corn market got some benefit from the wheat rally, went up, kind of hit chart resistance. Do you see anything that can get us out of that trading range? Weather, exports, what could be the catalyst?
I think a USDA coming down substantially on the Brazilian second crop corn production numbers and narrowing the gap with CONAB would be a big catalyst to get some additional short covering in the marketplace. That should dovetail with some larger weekly exports, Michelle, and I think that's what I would be looking for. We have gotten a lot of rain here the last week and a half. It's still too early to get too excited about it, but if we were to continue to get these kind of heavy rains into the middle part of May, that certainly could provide an additional kicker to the corn market, thinking that maybe less acres get planted and maybe some of those acres would have lower yield potential than the market's been expecting.
Until then, we're kind of just stuck sideways then.
We are stuck sideways. Watching grass grow might be more exciting up for a little while.
Yeah. All right. The soybean market did into the plus side, but that was a meal-led rally. What drove the meal market today? Was it some of this news about this Argentina strike? Or are we concerned about their, slow harvest pace down there?
Look, I mean, they had a half a crop the year before. Everyone's looking forward to those supplies coming back and them coming back into the export market. A slow harvest delays that. A strike delays those potential exports. So yeah, it's a big deal that to have the largest exporter of meal in the world having a slow harvest and having strikes that put question to when those supplies will be available. The other factor, I think, is the fact that we're just not seeing the crush capacity coming online for renewable diesel like we thought we would expect to see, and we're the lack of EPA mandates, the RIN prices really falling off a cliff, are really putting a kibosh on that capacity. And that means less meal supply than we thought. And the demand for meal from producers, in the low 300s, where we've been for a while, is very, very high. So I think the meal market is actually one of the few bright spots at the moment for the soybean price.
Okay. And of course, meal being spread against oil today too, right?
Definitely. I mean, there's been this big idea that the oil market's going to come back and the meal's going to be oversupplied. People are still not giving up on this renewable diesel story, and I think it's just the wrong trade for this year. And once again, I think they're getting blown out of this spread trade that they've been putting on long oil, short meal. I just don't see anything that tells me that that's the trade for this year. It might be the trade for 2025 if Biden gets back in and they rejigger some of these mandates, but for this year, I just think that that trade is coming off and probably going to stay off.
Cattle set back here today after a really strong week last week where we made new highs for the move. We got some help from stronger cash. So was today just end of the month profit taking, you think?
Yeah, I mean, if you really look at the chart, we're going up, we're going down, we're going down, we're going up. We're just not really doing a whole lot. I mean, people got a little excited about the cattle on feed report being bullish for the first one in a while. When I look at it, though, I don't see the demand domestically that's going to chase $300, beef cutout prices. And now we're already rolling over and beef cutout back from a lower high. Weights year over year are up substantially from a year ago. We still have a lot of cattle on feed that needs to come to the market here in the springtime. I just think the supply demand equation is fairly well balanced, Michelle. And I just don't see the justification to break up or break down substantially, at least through the springtime.
And as promised, let's talk about copper and the precious metals because we have had such a run into those markets. How much of that is just kind of a flight to something that is a hard asset right now?
We haven't seen the world in this kind of a situation where we could be on the verge of going into some of a kind of a global war, global altercation. It's been a long time. And we know that when we get into a situation like that, capital does flee to what are considered to be safe haven assets, typically gold, silver. Now Bitcoin has caught a big bid, and even things like copper or hard assets, farmland, that tend to hold their value in such times. We're definitely seeing that trade going on. The other factor that I think is on the minds of precious metals, goodness grief, we're looking at these debt levels all over the world just going up parabolically, interest payments as a percent of GDP going up parabolically. The money printing that will have to occur to keep these governments going is going to be so substantial. I think the market is also seeing that this is going to continue to cause the devaluation of paper currency and the devaluation, of people's purchasing power. And so I think that historically, that's always been a reason for increased currency-led inflation. So all these factors, along with electrification of the U.S. grid, electrification of the world, also in Europe in terms of electric cars, AI, artificial intelligence. I don't think people realize how much energy is utilized to create artificial intelligence and these high-powered chips. They all need copper, silver, and other metals to run. And so there's also an industrial demand story for at least copper and silver, along with the geopolitical and the the government spending issues that are going on right now.
Yeah. So geopolitical, maybe some inflationary buying, but the disconnect is you've got copper going higher while China, we keep hearing about their economy not being very good. At the same time, their stock market keeps going up. Talk about that disconnect.
There's this perception that because the demographics of China are turning south, meaning that their population is actually shrinking for the first time in history of the country, that their economy is in a perpetual downslide. The collapse of the real estate market, the collapse of their banking system. I don't believe the situation in China is anywhere near as dire as the market's making it out to believe. They've been putting a lot of money behind improving the economy. One of the things I think people are missing is they're a huge adopter of artificial intelligence and quantum computing. These technologies are growing exponentially, productivity. And productivity is growing so fast in countries like China, they can override the loss of the demographic component. I think that's where the market is missing the mark. It doesn't mean China's going to be rip-roaring, growing like crazy, but I think them crashing into some kind of a depression and staying there, we think it's more of a muddle along the difference between muddling along and where the market expectations are is a huge difference. And I think capital is starting to sense that China is actually going to still be around, and the stock market is the first place that the market is starting to see capital coming back in, as some of those stocks got pretty undervalued if the Chinese economy is going to continue to kick, at least muddle along at a high level here.
Some interesting market signals for sure. All right. Thanks, Sean, for that analysis. Sean Hackett with Hackett Financial Advisors. That is Markets Now.